What is up everybody, Gifford here and welcome to another video. Today we're going to be talking about my 4 stocks to buy in March 2025. So the agenda of this video is the stocks that I am buying this month, remembering that what I'm doing is specific to my own plans and my own strategies. I appreciate you watching this video, but please understand you have to do your own DD and invest for yourself. Do not follow others like myself just because I'm making videos in them, and don't be buying stocks blindly on other people's recommendations. And if you are new to investing, take your time to understand what you're doing and how it all works, and also dollar cost average into something like a world diversified index funds like VT. And if you want to get started, feel free to use my referral codes, namely Sharesies is a very good platform to start with, just to start you off. And if you use my referral codes, you get a couple of bucks, and what you can do is you can use that, buy like $1 of VT and then start tracking the markets and start learning. Remember, if you're new to this, it's going to be overwhelming, but I guarantee you if you start early and you do this for a long time, you are going to make a decent amount of money. You're going to be able to grow your money year on year, and you're going to be pretty well happy with yourself into retirement. And at the end, what I'll do is I'll just share some indicators that I use. Have a look at them, see if it's something that you want to use, but this is a good way for me to see if a stock is a buy or not. Just remembering that indicators are a technical analysis. You also have to do the fundamentals of the companies that you invest in. Or, as I say, the best way is just to invest into index funds across there if you don't want to invest in individual companies. So right here is something that I've got from the internet, and I've been showing it a few times. It's just how to understand and some simple rules of investing into individual companies if that's something that you're into. This is not exactly what I do or my plan. I kind of have a different plan, but this just gives you an idea of how to evaluate the stocks that you want to buy. So the first stock that I've been buying, which is on Sharesies, is the ticker symbol USG. And USG is the Smart Shares Growth Fund. So the focus is safe investing using an ETF. This is one of those smart shares type ones. And in this tax year, the main reason why I'm investing into this is that I'm trying to stay below fifth tax threshold. Hence why I've picked USG, because it pays the tax for me. And again, with ETFs, it's safe to dollar cost average into these because you just buy and you're going to get the fluctuations of the market. You can do a little bit of what I'm doing, which is timing, using indicators to buy at a better price, but it also means you need to have money on the sideline, which I do, but I'll explain more about this later. So going into my portfolio, it's got 86k in it, and that's because it's got some KiwiSaver in there as well. And my simple return is up 10%, and it's got $20,000 invested in it. Now let's just go have a look and look at USG. We'll just go down here a bit and find it. And here's a ticker symbol USG, which is Smart US Large Growth ETF. It says here that it invests in US shares and is designed to track the return of the CRSP US Large Growth Caps. If you want to find out exactly what it's holding, you can go into the Smart Invest website right there. But if we go down, we can see that I have been buying on this downtrend. So that's the last year, 6 months. Let's just have a look at the last month. So we can see here that I started buying it at $13 and just buying all the way down. And if we click my investments, we can see that I am currently down at minus almost 3%, right? And the amount I put in is 1,870. Now that must be New Zealand dollars because it's in the denomination. So if we scroll down, you can see here that I have been buying consistently over the last month or so. So if you're wondering why I've been buying this while it's going down and it doesn't look like it's a very good strategy, if you look out to the long term, what's actually happened is that this fund in the US, stock market has been traditionally going up over the long term. So this is 1 year, 5 years. You can see that this little downturn is pretty minimal, right? And here, this is the kind of returns I'm hoping to capture in the next 5 to sort of 10 years if I do end up still trying to buy into this fund. We can see here the 5-year price change is 140%, so to be able to get that would be spectacular. And if you go to 10 years, it doesn't have the data here, but you can see that it has just been going up constantly. Okay, so that's the kind of things that I'm looking for in this fund, especially right now. I don't know if everything is just going to keep dropping and we're going to have a stock market crash. That's why I'm buying this for safety. So stock number 2 that I am buying is on Sharesies, and the ticker symbol is QQQ. Now this has big tech in it, and basically what's happened is it's had a massive hit during this downturn. So it contains all the NASDAQ big dogs in there, and they've taken a massive hit right now as the stock market has come down due to Trump and all the tariffs and all the things that is happening that is affecting the US markets. And I think right now is a big opportunity for me to buy at a cheaper rate. By buying QQQ, the likelihood for me to make money is high as a turnaround play, because eventually, you know, the stock price is not going to keep going down. It will go up because these companies are very profitable. Because it's an ETF, now this gives me a lot of safety in these big companies because they do make money, right? And it's, you know, the most popular NASDAQ companies are in there. So eventually I feel it's just going to go up again, as opposed to buying individual stocks, which is going to get pretty rocky because it's all dependent on the one stock. But this one here gives me a lot of diversification. Granted, QQQ and also having USG is, there's going to be some mixed, you know, there's a lot of overlap in there, but that's fine because I'm hoping to capture that rise and stock price and get those gains compounding for me. So this is a screenshot that I've taken on the 14th of March, so a little while now. But anyway, this just shows you the decline that has been happening in the last 52 weeks. So it's, you know, minus 21%, minus 20, right, 19. Fairly decent. Look at that one. Tesla is down almost 50%. I think they're down 50% now, but it just goes to show that I feel these companies here, while they have been growing and the stock price is pretty inflated, right, from, you know, if you compare it to the EPS and all that kind of stuff and their PE ratios, traditionally when you're looking at value stocks, you want to be going 10 PE, but I think now in this era, people are going to be paying a little bit of premium to be invested in these companies because of how much money they make and they're so dominant in their sector. So I think this is, you know, an opportunity to buy these, but I'm also not kidding myself. You know, look at the valuations on these places. The market cap is $2 trillion, $3 trillion. You know, these are massive amounts of money. If you actually compare what $1 billion is compared to $1 trillion, it's significantly larger. And yeah, so these companies are just getting so crazy valued that the world is paying a lot of money for this, you know, and in the end, it's just sort of paper gains. But I think the world is going to continue and these stock prices are going to continue to rise over time. So going back to my portfolio, let's have a look at where QQQ is. And I'm in the stock now and you can see its description there, what it's invested in. So here it is here, the big guys, right? Apple, Microsoft, Nvidia, although I'm playing Nvidia already, so I'm pretty much double dipping into there. But anyway, we can see in the last year, I've actually been buying the stock and it's been pretty rocky, but yeah, if I've been buying it constantly, we can see here that I do end up buying the dips a little bit and then as it goes up, and now it's just sort of come down. But if we hit the 5-year chart, we can see that even though I have been buying for a little while, it just makes it a shorter time when you go over 10 years. And this is what I'm hoping to replicate, that it does go up. What's the 5-year return on that? Look at that, 180% return on your money, right? That's crazy. So I don't want to make this very long, so let's get on to the third stock, which is, you'll know, which is Tesla stock, and this is on Sharesies as well. So I reckon it's an opportunity to buy right now, but I am waiting on the reversal because there is a lot of hate for this man of what's going on in the US. Now, I also agree that Elon mixing with politics has hurt the stock a little bit, but this is what you're going to get, right? I firmly believe that if you were to value Tesla stock as a company, it will be the same as all the other car companies, which would have a low multiple in it, and the valuation on it would be pretty low. But people invest in Tesla stock because of the hype, what's coming for the future, and also their cars. And you can see here that Elon faces weeks of harsh setbacks amid Tesla sell-off and the Dodge backlash. So from this article, Tesla shares are reportedly falling globally. How bad is it? Now, this is a very big discussion point of what's going on. And to me, yeah, it's understanding that if they don't sell many cars in the future, then your revenue is going to go down, and that's going to hurt the stock price and make it a value into, you know, a traditional car company. And the stock price is going to absolutely tank. Probably, I don't know, if I was just to say $80, $40, who knows, right? If the hype is gone from it, it'll be significantly lowered. But if we look at the facts here, we can see that worldwide, while they say the demand has absolutely been destroyed, actually the amount of cars that they made in the last 2 years has been the same. Now, you've always been told that Tesla cars, no one's buying them anymore, but clearly they are, because, you know, in 2024, while they sold lower cars than 2023, they still sold 1.7 million cars. And in 2023, they sold 1.8 million cars. And people saying that no one is buying their cars right now, it's kind of the same story, although there's a lot more hate, so maybe it's going to come down a little bit lower and you're not going to see this big growth here. But in saying that, the stock price has already come down as well by like 50%. So I think there is an opportunity here. I just am not buying right now. I did have a target to buy around about $200.20, but I myself am just watching it because you do have to respect the trend, and if the stock price is going down, well, I don't mind missing out on a couple of dollars to make sure that I see a reversal when to buy. And I just want to show you this video here that's just recently come out about Elon and what he's saying that's going to happen in 2025. Remember, I said that Tesla is a hype stock and people pay because of what's happening in the future. He's just going to talk to you here about what's happened and the reason why, if you want to invest in Tesla stock, these are the things you have to believe in, as well as their cards, but you have to believe in their future products.
So we're going to go through just a list of the incredible achievements of the Tesla team. We've now produced over 7 million vehicles. 7 million! In our first year of production, we produced just over 20 vehicles. And I thought, well, maybe we might one day be able to do 10 or 20 a week instead of 10 or 20 a year. And the way things are tracking right now, we will actually have made over 10 million vehicles next year. So we'll pass the 10 million vehicle cumulative. That's a lot of cars, man. That's a lot of cars. And it is always, I think, profound to watch our cars driving with no one in them. And we actually have the cars doing useful work for the first time with no one in them, which I think is really, it's a significant milestone. So the cars are driving from end of line in Fremont to park themselves, and I think we've just started doing that here in Austin. So we'll be, the car literally goes from end of line in Fremont to its destination parking spot where it gets picked up by a truck for delivery to a customer, and it does that with no one in it, and it's not doing that all day every day, like it, pretty much like it's just a matter of fact thing. I mean, look, that's where we came from. It's wild. So in a very short period of time, Optimus has gone from being an idea to the most sophisticated humanoid robot on Earth. There's nothing even close to the level of sophistication of Optimus, and Tesla has some important missing ingredients that others don't have, which is our robot has a real brain. It's like the Wizard of Oz, Tin Man. Well, was that a heart or a brain? One of the two. Tesla's the leader in real-world AI. What we learned in the car, we translate to the Optimus robot. And we also take our expertise in electric motors, in batteries, power electronics, structural design, and then another major important thing is that we're very good at manufacturing. So in order for robots to be useful, they have to be intelligent. They have to be able to do useful things just by asking, and you have to be able to make a large number of them at an affordable price. This is what we can do. We have the only company with all the ingredients for making intelligent humanoid robots at scale is Tesla.
So on Sharesies, we can see here that the stock price is currently $236. In the last 3 months, it was as high as $460, and it's just been going absolutely down. So that's almost 50% off. However, if we look in the last year, I think my cost average was about $170 at the time when I picked up shares. We can see that it had a massive climb up and then back down again. So it's not surprising that it did crash down. I was selling between sort of the $250 to about $400. A lot of my shares were actually around the $310 mark because I thought that was quite overvalued at that stage. And we can see here, even though it has come down significantly, the PE ratio is still $115. The market cap $760 billion. So yeah, it's still quite overvalued by these markets. But as you saw in that video, what you're paying Tesla is the hype, and more than that is the products that are coming up in the future. So what you saw there, that they're going to be producing another 1.5 plus million cars again, going to take them to 10,000 million cars overall. And on top of that, you have the full self-driving, which they might be able to monetize. There's a lot of views on exactly how that's going to work. There's also the ride hail that's going to come out, and that's going to make some money for them. Along with that is the robots, which is the big, that's the big spin on the money maker type stuff. So to invest in Tesla, you have to believe in all those products and in the company company as well. And to be honest, it's not like they're brand new. They've shown before that they can deliver big products, make big money, and these are innovative, futuristic products that they can build, and they have the smart people to do them. The timelines kind of get messed up once in a while because these are complicated problems that, you know, they need solutions for, and they've got to innovate and make these. So I can see why. So moving on, because I can probably talk a little bit more about them, but the next stock that I've been buying on Sharesies slowly is Soundhound, which is ticker symbol SOUN. And before I go over to Sharesies and show that, it is a high risk stock. It is no PE, which means that it's negative, right? Negative earnings on that one. And while they are fairly, you know, small cap at $3 billion or so, but in saying that, they are poised for high growth, and this is what you're paying into before that crazy growth comes out and the stock price rockets up. I'm trying to get early in this because I believe that they can, you know, sort of create these massive growths in the future for their products, the AI products that they're making. So it's set to grow revenues at over 50%. I saw from the analyst. This is what I'm betting on, is that why I'm investing, but I am putting only a small amount of money in them slowly. And this stock is all about trading on its technicals to make money from. And there is no DCF model on the discounted cash flow model because the stock is unprofitable. So we can see right here, Soundhound, it's on the NASDAQ. So if we look back in the 1 year chart, we can see it was about $3 or $4 before this big rise here, and it got all the way up to $24. We can see when I started buying them, I did want to buy them up here, but it just shot up too much, and I was thinking, well, as soon as it went down into sort of this tier, I was keen to buy. So I've only been buying into them in the last month, and already that the share price has gone down significantly. We can see it's $3.8 billion and no PE. So looking here in Yahoo Finance, Soundhound, we can see that the revenue versus earnings, see how it's all kind of negative. There's good demand by the analysts in here. They reckon, you know, some of it's a strong buy, or a majority is a buy for the stock, and they have their targets here, and they reckon there is prime for growth. But remember, this is just their kind of, you know, their recommendations, right? The company's still unprofitable, and in the end, a company has to make decent revenue or increase that revenue, and it has to make money to be able to survive long term. What people are wanting to see here is that they, you know, they believe in this revenue, and we can just come down here. So where is it? They're making 38 million now. So for this year, they are going to make 166 million overall for 2025, so that's what's estimated in here. And then next year after that, they're going to increase that to $215 million. So if we were to unlock more of this into 2027, they're expecting it to grow even higher, right? This is what is being expected of the stock. And very quickly, I just want to show you a bit of how I am picking the dips and buying these stocks here, which is totally different, right, from the ETFs. And the ETFs, I just tend to dollar cost average, but for these sort of growth stocks, these volatile stocks, high risk stocks, what I'm actually doing is I'm using the 10 moving average, and then also having a look at the 20-day moving average, and just seeing where the price lands. Now if we look at Soundhound, we can see here that so this is candlestick charting, but anyway, what I'm looking for is that there is a reversal trend, and we can see here that the stock price has gone down and is now meet up with or exactly at the 10-day moving average. So what I'm expecting is that if this sort of gaps down, I'll be holding off buying. But if we see this sort of gap up, go, you know, the candlestick sort of trend up and break through this 20-day, when I think that it's pretty bullish, and therefore the stock price is set to go up. Now, remembering that these stock charts, you know, they can break through here on their own, and they have their own mind of what they're going to do. But this is how I am trading at the moment, is that I'm looking for the places where it's breaking through and showing some momentum. So right now, where do I think it's going? Well, we don't know enough yet, but I'm just holding off because it can go down, and I just want to wait because it could leg all the way down back to $5, right? We don't know what's going to happen here, but yeah, as long as I have some money on the sideline, and if it gaps down, I'll be buying some more. If it goes up, then I will probably buy a little because it's a good trend to see a stock price move up. But also, you know, it's still unpredictable. They still haven't got earnings, so they still continue to go back down. Anyway, just a quick summary because this video is getting on. I'm just buying more funds at the moment for this month and probably in the continuing months. I know it's pretty boring, but it is safe. The growth stocks that I've been talking about, they are in lower capital. You know, I'm going to be putting lower amounts into them. The general stock market is overvalued. attitude, and I understand this, but I'm still buying while I'm increasing my sideline cash, which is now at like plus $10,000 or whatever's in my options trading account, which is just kind of wheeling at the moment. Anyway, thank you very much for watching. If you have any questions, put them down below. I'll be happy to answer them. Feel free to use my referral codes. If you want to hear more from me, you can head over to Instagram, where I post every other day about what I'm doing in the stock market and some stock market news.
The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Invest Now for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand.
I'd really appreciate it if you like this kind of content to hit like and subscribe. Also watch a couple of my videos so I can get eventually monetized on here. That would be really awesome. Watch it twice. I'd appreciate that. Otherwise, feel free to click this video here for my total stock market portfolio that I have. I'm totally transparent. I share with you what I've got here. There's no hiding everything, and I'm not the best stock market picker in the world. I'm just showing you what I'm doing, and I don't think I'm doing too bad from someone who started, about 5 years ago and just putting $5 a week into it, or, just a small amount of money that I could do, into now growing it over $100,000, including my KiwiSaver in there as well. I'm hoping one day I'll get to past that $100,000 mark with only my personal account, and then obviously if you add KiwiSaver into there, it gets pretty good, right? Thank you very much for watching, and have yourself a good weekend.